Thursday, December 20th, a recap and plus something else. So let's do the recap fast first. So yesterday, 7:30 in the evening, Nasdaq buy 11,274 or sell 11,172. So the long side never triggered, at least so far. It's still early in the day. Anything can happen. So 7:30 was the post, and right around 10 p.m. Um, they sold off hard, broke it hard, and well, I mean, over 100 points. Over 100 points. I don't think anyone took it. It's 10 p.m. Eastern, and so if we fast forward to the London Open, a number of opportunities in the London Open. Again, if you're going for 5 points, there are a whole bunch of opportunities here for 5 points. If you waited, what time is this here? Yep. So if you waited for the U.S. Open, again, this first going price going over the trigger and then coming down to around 159. So again, from 172 to 159, more than 5 points. So you could have gotten 5 points there. Then price broke. I'm sorry. What? Yeah. Sorry. Price breaks above. Price again breaks below, and again way more than 5 points. But you're going to count 5 points. And now price broke above again, and so far it stays above. Um, Before we go to oil, though, which again, oil I think had a pretty tough day. You know what? Actually, let's do the oil first, and then I'm gonna say something. I think there was an excellent question asked by a trader that you know what? I don't want to forget it. I'm gonna do it now. I'm gonna answer the question now. The question was, what if there is a day where let's say you trigger in, you take let's say a $300 loss, so 15 points on the Nasdaq, 30 cents or 30 ticks in oil. Then you get triggered again, and again you take a loss. Now you're down 600. What if then price doesn't trigger again, just stays kind of in between the buy and the sell triggers, and here you are down 600 or down 800 if you risk more. I mean, that's a substantial amount to lose. Is it something that could happen? So, excellent question. First of all, anything that has a reasonable probability will happen. So the short answer is yes. Even though, let's say it's something that has maybe only 7% chance of happening, the fact is, if you trade 100 days, right, you can expect it to happen over a large sample 7 times. So, yes, it's something that could happen. How do we deal with this? And that was difficult for me to really come up with a good solution. There are a few ways to look at it. First of all, um, you can look at it like this. Let's say you trade 10 days in a row, both oil and NASDAQ, and you make 100 in each, and it's 200 a day for 10 days. It's $2,000. Then let's say you have one of the days that you described. You just get triggered in and just nothing. You take two losses and then you're not able to recover. Let's say you're down 800. So you made 2,000, you're down 800. So after 2 weeks, right? So let's say 10 successful days and then this one bad day. After 2 weeks in a day, let's say, you're up 1,200. Let's say after commissions, 1,100. You're up 1,100. This kind of an approach is okay as long as the numbers work out like that. It's like a two steps forward, one step back kind of an idea. It's not bad because you're still profitable. That's one way of looking at it. You accept the fact that there will be bad days. Most days are going to be great. Some days are not. And on those days, you will take a drawdown, which is why I say all the time, right? For every $3,000, you are trading one E-mini. For every 3,000, one E-mini. You leave yourself plenty of room because drawdowns will happen. You can reduce the probability of that happening. Again, not eliminate, but reduce by, unfortunately for some of us, trading only the US Open, staying away from Globex. There was less participation. There was actually a lot less participation in Globex. Um, and so funny things are more likely to happen. Most of the time, there is no issue, as you can see over here, and as you have been seeing since we started this one 2 or 3 weeks ago. Um, but sure, during Globex, there was less participation, and so things like that could happen. And it's actually happened with oil both yesterday and today to some extent. Um, NASDAQ appears to be less of a problem. But again, even in NASDAQ, there could be a situation, and eventually it will happen, where you're not able to fully recover. And that just might be part of your trading plan. You just accept that. Now, after I said all that, um, I'm going to show you something. Now, as I was thinking for this answer, um, as I was thinking for the answer to this question, I should say, a situation happened here. So I put the computer on somewhere around 6:30. So somewhere here, right when price went above, and I came up with this. Now I recorded a live trade, and I'm gonna add this live trade at the end of this video. What happened was I got so excited to be able to show this that I did not enable audio. And so there was no audio in that video. And I was actually talking a heck of a lot. So I'm going to try and repeat what I said in the video now. What was happening is that, as you've seen before, around 6:30, now price is going up after being down, if you remember, about $1. It got to around 11,040 or 50 or something like that. It came back up to the trigger area. If you remember, the trigger is 172. And it broke through it. Now, what you're looking at here is Blue Wave Trading Precision Auto Trader. If you never heard of them, there is a link in the description. I've made videos using this software for about 3 years. There are hundreds of videos of me trading in different ways. This software, it is an amazing program. It is the only program I would recommend. And it's not because I'm an affiliate or anything like that. I make no money from sales of this software. But after 3 years, I did not find anything that even comes close to what this software has to offer, both in functionality and reliability. So, as price began to come up, I drew a box around this 172. No more than 10 points. When I do this, no more than 10 points. Price is coming up. Even though price is coming up, I remember that the trigger to sell is 172, which means the market is in a weaker position. At this point, and I did not begin recording when I first put the box. As you can see here, both longs and shorts were enabled, but that's only after the short took place. Here is the logic. Price already broke through the sell trigger and gave you a huge move down. It's now coming up. On the second try up, it is possible, there is some probability that this 172 will start functioning as a support area as opposed to a resistance sell area. So after the trigger short, I'm thinking, okay, if they're gonna reject this now, if they're not gonna give me my 5 points, I enable the longs because if now they're gonna break it, there is a very high probability that I will make up the loss of 10 points and still hit my target of $100. Um, so for myself, normally I don't like to buy a sell area, but what this creates is it creates a situation where you will not have to take large losses. If this does not work out, let's say I took this trade, and indeed 172 is no longer, as far as the market is concerned, a sell area, but actually becomes a support area, they would drive this up to well over 200, possibly even then hit the buy area of 174. I'm sorry, of 274, right? The buy for today was 274. And then I would be able to hit my target of $100 even if I first take a loss on this short. So again, when would I use this? If I'm in a situation where the move already happened and now they're coming back to the trigger, as you've seen over the past number of days, market almost always will give you a second shot at the trigger, long or short. Markets tend to come back to retest. The numbers I give you are not random numbers. There is a reason why the market needs to do this. So they come up, they sell off, I hit my 100, beautiful. How much did I risk on this trade? 10 points or $200. So, and not only that, if it broke through, like I said, market is not going to stay in this 10-point range for the next 8 or 12 hours, right? It's not, it's, well, not really, if it's 6. So the next like 6, 7 hours, it's not just going to stay here. It will move away from this 10-point range, and not just a little bit. It's going to move by at least 100 points from this range. What happens though, look at this. Hits the $100, right? Here's the profit, hits the 100, comes back up. If I was to refresh my chart, it would take a short again here and hit 100. Again, goes back in the box. If I was to refresh my chart, it would take a short here, or depends at what point you did it, here or here, no matter what. It would not get stopped, right? The top of the box wasn't triggered. It would take a short again. It was another $100, and then they sell off quite a bit. They sell off, and then let's see. So now it's U.S. Open. Now then, later in the day, again, here is a short. You would stay short. Definitely got you 5 points. In the box again. You see how they keep on retesting it, right? I mean, that's the idea. In the box again, out with a short. Definitely could get a lot more than 5 points, but let's just focus on the 5 points. Was this it? Maybe this was it. Maybe this was it. No, again, so went in the box. I guess this bar closes below the box. It would have been a short. You would have gotten stopped, taken a long, and the long, here is an example, would make up your short because the high was 10. So almost 30 points from the box. So if you lose 10 points, you make up the 10 points and hit your 5 over here. This is a very effective way to trade, and it would cut down on big losses. It would not eliminate losses. Let me be clear. It would not eliminate losses, but it would cut down on big losses. And the key here, I find, is to keep the width of the bar I would say no more than 10 points, less if you can. The market would allow you. So you can watch the live video of this trade at the end. It will have no audio. Anyway, let's get to oil. All right, so oil was a buy 76.28 or a short at 75.47. So let's see, when was the first trigger? So the first trigger, I guess, was in the middle of the night on a short side, but I guess no one is trading this. Um, then during London Open, um, went slightly above the trigger and short again, 10 ticks, not an issue. And the stop is pretty small. The stop would be above this pivot, right? So this is a beautiful trade because the stop is very reasonable here. Um, then I guess if you did not take the short, there was a long that again gave you 10 ticks from 70, was it 76.28? And the high is 51. So 10 points again would not be an issue. So this is looks like right around, I should say, US Open and the official oil open at 9 a.m. Eastern. And from 76.28, the high here is 40 or 41. So again, on this week here, you would have gotten 10 ticks. Now, if you did not, and here is, because I was watching this live, this triggered over here and definitely stopped you out. No question. Stopped you out. It touched the trigger and just bounced right out. This next trade here, and now I guess it all depends how much you risked, right? So 75.47, and there is a low here of around 11. So what, like 36 ticks. So there was 36 ticks available here. Not sure what traders would take. Then price goes above, triggers again, and this time it gave you a decent move down as the low on this move is 74.46. So there is a full dollar available on this move down. So 100 ticks. So I mean, I guess if you lost 30 here and you took this short, maybe, I mean, you would make up the 30, but maybe you wanted to stay in for the daily profit. I'm just trying to imagine different scenarios. And if that's the case, you probably got stepped out again. So now you let's say you're down 60 ticks. Well, this is 100 ticks. So you make up the 60 and you make another 10 or 11 if you want to cover some commissions. Uh, Plenty of room to do that. So another, I think, a fairly tough day for oil. By the way, I'm very impressed with a lot of you who did well with oil yesterday. And I thought oil was pretty tough yesterday. But a lot of you had either one and done or you just you took one loss and you made it up. So very impressed with this group, really. I don't think this has been very easy trading for oil, but apparently a lot of you are doing great, and that's terrific. So again, even if you took somehow, let's say you didn't take any of these profitable trades, and instead you hit the two losing trades only, you still, if you stuck with it on this third short, made up the losses and hit your $100 daily target. And this happens over 90% of the time. However, there will be days when you will not be able, when the market, let's say, will not allow you to make up your losses. And those days could be losing days, and there is really not much to do about it. The best traders in the world have losing days. That's the reality of trading. Okay, so I think I said a lot in this video. Please, your reactions, even if you did not trade today, if you own the auto trader, let me know what you think. Let me know if you have any questions. If you do not own the Auto Trader, at least give it a look. Again, the website is in the description, and I do think they're running some pretty nice specials now as the year is ending. It is a solid software, it will help you a lot. Um, all right, that's it for today.